Hello, everyone. This is Don Jergler, and welcome to the Insuring Cannabis podcast, a bi-monthly trip into the intersection of two industries that couldn't be more different. Hi, I'm here with Griffin Basden of AlphaRoot, and we're going to talk a little bit about 280E and some of the changes in the federal stance on cannabis. But before we do that, Griffin, can you introduce yourself and tell us a little bit about what you do with AlphaRoot?
Absolutely. Thank you guys for having me. So I work with AlphaRoot, and we are a full service cannabis insurer retailer. So we do anything from property and casualty insurance all the way to disability. And we have some hemp operators as well, but our bread and butter is cannabis. And so with this rescheduling news that came across, it's been kind of interesting, right? A lot of changes are going to happen over this next year. Just for a little overview, I know you're the people who listen to this podcast and read your articles have some insight into what this rescheduling could mean. But 280E is going to allow us, our cannabis operators, to deduct business expenses from their taxable income. And basically, long and short of it is that more people will have money once this finally goes through. As we know in cannabis, more money is always a good thing, especially if you use it to buy insurance with. That's what I like to say, at least.
Yeah. Well, I mean, more money is a good thing. And I guess it's going to impact cash flow, right?
Absolutely. Cash flow for the people that we work with has been a huge issue over this past 18 months or so. And being such a cash heavy business in what seems like a recession this year has been tough for a lot of these smaller operators. So definitely will free up some cash at the operator level to allow for, maybe their employees get paid a little bit more. Maybe they're able to hold more stock, invest in new locations. It really should help out the smaller operators so much, though.
That's great news, because you don't hear a lot of good news like on the West Coast, from the cannabis industry lately. I mean, you talk about, an industry that some people worry is built out, the glut, that sort of thing. So you get some good news out of this for a change, right?
Finally. And, it's interesting because the news that came out is more of a direction for cannabis to be rescheduled and not actual rescheduling. So, all these conversations we're having now are all theoretical, assuming the DOJ actually reschedules it. As far as I know, that hasn't been done yet. So fingers crossed that it goes through sooner rather than later.
Well, what if anything, I guess, does this change mean for cannabis companies' exposure to things like lawsuits, claims, regulations?
I think the thing that's top of mind for me is coming back to cash flow. Always, I sound like a broken record. But the more cash we're able to show on our balance statements, on our income sheets, the more financial risk that we have for our management lines, our financial lines like E&O insurance. And so I think that there will be more exposure to losses on the D&O side as well, given the regulatory questions, I guess, right? But it's still federally illegal, right? This is a step towards destigmatization. Wow. But we're not talking about this huge overhaul that I think a lot of people were looking for. I've been in this business 4 or 5 years now, and we've been talking about rescheduling and, making cannabis federally legal for 10 years. So I'd like to think that this will free up more money and more people will buy insurance with it. So the loss profile for these cannabis related businesses will, have lower rates and hopefully be able to get more insurance easier. But all that remains to be seen.
Well, you mentioned D&O. Any effect on management liability risks?
Yeah, so the regulatory concern is always top of mind for us with cannabis companies. Whenever we place a management line, we're trying to get regulatory coverage to help, these directors and officers be covered in the event of the worst happening, right? No one wants to be pulled into a lawsuit like that. But I'm hoping, right, that this deregulation will allow more insurers to enter the space, and we'd be able to get coverage more easily. Again, remains to be seen. I don't love our chances in the next 12 months, though.
Well, yeah, there's always a caveat. Well,
always, yeah.
What sort of coverages could be needed following this change, or could be needed more?
I still think that D&O is going to be one of the biggest concerns, but like always, these package risks are more important from a operator point of view, right? General liability, product liability, property liability, to protect your investment into the cannabis space. And I'm hoping that with more freed up money, that these smaller operators will have less of a high bar, right, to be able to adequately cover their investment. So I'm hoping that these mom and pop shops will have an easier go of it over these next few years.
Right. Well, in fact, I just did a podcast a little while ago on banking, and there's a surprising number of banks that actually do business with cannabis. It's not just all, but it's still a cash heavy business at dispensaries. You always talk about, safes, what kind of safes they have. They're keeping a lot of money that are still. I mean, is there any potential changes to any of that? I
don't see that coming.
Okay.
Down the pike necessarily. I would love for us to divest from the cash heavy business. I heard of something horrible happening, with a guy being held up at gunpoint while trying to deliver cannabis during his daily activities at work. And that is the worst scenario for that guy as well as the operator that employs him. And so, crime insurance is huge for cannabis companies. And it is one of the largest risks, I think, that is underinsured right now. We have some insureds that have, $50,000 on site at any given time. And you have to have such stringent safeguards to be able to cover that. So it's really all up in the air. Dang, I wish I had a better answer there.
Well, and that sounds pretty good to me. I mean, hopeful for the future, I guess. Well, let's plug in any holes that we miss. I mean, these tax things always confuse me anyway. What are some other impacts for cannabis companies and the people who insure them post this 280E tax savings?
I was actually speaking to some operators the other day, and they were under the impression that they wouldn't have to get cannabis specific insurance now that cannabis is being rescheduled, right? And it's like, no, the loss history for the cannabis space, right, remains the same, even though at a federal level it's being seen differently. And so I think one of the biggest holes I've seen is that people are expecting this huge, black and white shift overnight, when really what we're going to see is this kind of trickle down effect where people have a little bit more money. They're able to expand a little bit more. Maybe they're able to go to a real bank instead of keeping $50,000 on site, and then that will gradually change the way that the cannabis space is seen by our insurers. And then that will provide savings in the insurance space. But until then, it's kind of a hope and a prayer.
Well, this has been great. Thank you for being here. I really appreciate offering your knowledge and insight on this.
Of course. I really appreciate you guys as well. Thank you for having me.
Well, there you have it. Thank you for listening to the Insuring Cannabis podcast. You can find other episodes from this series by visiting insurancejournal.tv. Until next time, I'm Don Jergler.